Good afternoon. Welcome to Midcap Radar live from the CNBC-TV18 Motilal Oswal studio. I'm Sonal Bhutra. With me as always is Vivek Iyer. Hey Vivek, good afternoon. The Nifty in the green right now, but just at the flat mark. It's been very volatile and was something which was expected as well, considering it's the first Tuesday expiry ever. Right. So a lot of volatility, but the last 1 hour will be very crucial to watch out for.
First Tuesday expiry ever, and keeping in line with earlier expiries on Thursday, the volatility is the only thing that remains quite intact. Well, we have a lot lined up on the show, an important corporate conversation as well. So let's start off with the top headlines. Stocks oscillate in a range ahead of F&O expiry today on NSE. Metals and IT eke out some gains, while consumer durables, realty and FMCG drag. Midcaps lag.
A string of listings in D Street this morning. Solar World sees a listing pop up around 10%. Meanwhile, it's flat listing for Jaro Institute.
Coforge gains after CLSA initiates coverage with an outperform rating and a target price of 2,346 rupees a share. Says the company having a consulting mindset is visible in its strong order book, revenue and earnings growth.
Sammaan Capital continues to rally on a number of triggers. The company's board is set to consider a fundraise on the 2nd of October. ICICI Prudential also picks up stake in a big block yesterday. The stock, however, is back in the F&O ban list.
Man Industry is under pressure after SEBI bars the firm and 3 of its top executives from securities markets for 2 years. The company says primary issue alerts to non-consolidation of their subsidiary Merino Shelters along with minor compliance lapses.
Okay, those are the headlines that we are tracking for you today. But of course, the mid-caps are the ones in focus. They are the ones underperforming the benchmarks. PSU Banking Index lending some support, but it continues to oscillate between the green and the red as well. Mid-caps at the day's low, but we have a whole host of stocks which are on our radar, be it on the back of news flows, be it on the back of block deals. We've been discussing it since morning, but this is our special segment, Mid-Cap Movers. We have Ria. She is joining us to take us to the mid-caps that are moving around in trade. Hey, Ria.
Hi, Sonal. Let's take a look at the stocks that have been buzzing in trade today. Let's take a look at the gainers first. The first one is Blue Dart, up around 5 to 6% after the company announced that it is going to increase its average shipment prices in the range of 9 to 12% with effect from the 1st of January of 2026. Thomas Cook is the next one. This one has been in focus since the company has partnered with the Ministry of Tourism to elevate destination experiences across India. DCX Systems has also been in focus today after an order win worth roughly rupees 50 crores. These orders were for electronic module assemblies as well as cable and wire harness assemblies. 2 stocks at their 52-week highs today, Tata Investment Corporation as well as Netweb Technologies. These stocks have continued their run over the last 1 month. Tata Investment up around 37% over the last month and Netweb going up by over 65% over the last 1 month. Sammaan Capital has also been in focus today, up around 2 to 3% after a big block deal. ICICI Prudential Mutual Fund has bought around 44 lakh shares at a price of rupees 151.95. Coforge was the next one that has been in focus today. This is the biggest gainer in the Nifty IT index pack today, or over 3% higher today after CLSA came out with a note on the stock. They've initiated with an outperform rating and a target price of rupees 2,346. Taking a look at the stocks on the lower side today, Man Industry is around 12 to 13% lower after SEBI has barred the firm and its top 3 executives from the securities market for 2 years. Media stocks have also been lower today. The index is down over 1%, being the biggest sectoral loser today. PVR, Inox, Sun TV, as well as Tips Music and Z Enterprises trading lower after US President Donald Trump announced a tariff of around 100% on all movies made outside the US. Realty stocks have also been trading lower today. The likes of Prestige, Godrej Properties, Anantraj, Lodha, DLF, as well as Sobha trading lower in today's session.
Thank you so much, Ria, for joining us and taking us through all of the stocks from the broader end of the markets that are making the moves both on the upside and on the downside. Well, it's a very good time to welcome Shrikant Chauhan for a quick technical check on the market. Shrikant, good afternoon and thank you so much for joining us. Shrikant, we'll keep it a little short today. First up, what's your view on the market, especially Nifty on expiry day, and what are your top picks for the day?
Good afternoon, Vivek. Good afternoon, Sonal and everyone. So for Nifty, we are of the view that it is trading with a downward bias. It is finding difficulties to sustain at higher levels. Today we saw gap up opening, but again, eventually the market is now again trying to move towards the levels of 24,600, which was the lowest of the previous day. I am of the view that till the market is not crossing 24,800, we are going to witness range-bound activity between 24,800 and 24,500. But close to 24,500, the market is having support. So close to those levels, we should look for taking some long bets in the market. But at these levels, it is better to be focused more on stocks.
Okay, all right. Shrikant, thank you so much for joining us today. These are some levels to watch out for on the benchmarks, but we'll slip into a short break now. Management of Brigade Group will join us to discuss the FY26 outlook, the real estate residential demand, and a lot more. Welcome back. Brigade Enterprises, that is the corporate on our radar. Joining us now, the company has recently announced a slew of projects this month and last month as well. M.R. Jayashankar, who is the executive chairman at Brigade Group, joins us now, and we'll discuss the demand trends in Bengaluru market, the residential project pipeline because it looks very strong, outlook on the commercial or the leasing segment as well. Mr. Jayashankar, good afternoon. Thank you so much for joining in. It's been a while since we spoke to you, so there are a couple of things that we'd like to understand. This is about the company's pipeline, because there have been a lot of JVs, JDAs that the company has entered into this month and last month as well. By when will they materialize? Will you see some bookings coming in from there in this fiscal itself? And how are you planning to expand? Will it be via the JDA model as well going forward?
Thank you. Thank you for inviting me. So, historically, if you see, Brigade has always been doing about 50% JDA and about 50% in purchased lands. So somehow it has been going like that with a variation of 5 to 7 or 5 to 10% on a year-to-year basis. And recently we have in the last 9 months, we have announced about 15 million square feet of new projects. Of course, about 70% in Bangalore and 30% in Chennai and Hyderabad. And I think the market in Bangalore is fairly robust. I would say this year, FY26, even for the first 6 months, the overall sales in the Bangalore market is higher than the last year, and we hope the next few months also should be fine for the city as such. But as far as Brigade is concerned, compared to the overall country performance of about 15% is the overall reduction in the outtake of the market in the sales. So to that extent, we are also, I would say, we may be down by about 15% compared to the last year in the first 6 months, and we are working hard to make up for the next 6 months.
Okay, so that brings us to our next question. Q1 sales was flat around 1100 crore mark. You've guided the street to a 15 to 20% growth of pre-sales as far as FY26 is concerned. Post H1, would you be trimming that particular guidance down?
Yeah, we hope to substantially do better in the H2. Okay. Primarily because a number of our projects approvals got held up or delayed due to a variety of reasons, including the formation of Greater Bangalore Authority from the earlier Bharat Bangalore Authority. So I think things should are settling down, and we are eager to, I would put it that way, to launch more projects in H2.
Okay. Mr. Jayashankar, you've been in the industry for a long time, and now that we are in this real estate cycle, we saw an up cycle for the last 6-7 years. Do you think we are somewhere closer to the peak for two reasons? Because we have seen it for so long. Secondly, there have been a lot of issues around the IT industry, global layoffs, plus TCS talking about layoffs as well. And third, pricing also has surged massively. Do you think all of it would come down because of these reasons?
I would put it this way, see, after almost from 2016 to 2021, due to variety of reasons like demo, RERA, GST, COVID, so the real estate market was soft, and from 2022 to now, last 3 years, it has bounced back in a very big way. And with all the I would say the uncertainties in the global market, uh, India is a fairly insulated and resilient, as shown in earlier, mega issues like the global financial crisis of 2008, 2009. And we have been resilient, and we are, as far as real estate is concerned, we are substantially, it's a domestic market. And whatever is happening in the global market will have some impact, but I think there are opinions that we may be the beneficiary. IT sector may become the beneficiary in the medium to long run. In the short run, it is very uncertain. The situation is fluid. Every day there is some kind of new announcements by United States president, and
Right.
it may have. So it is very, very difficult to predict.
Okay.
Mr. Jaishankar, the other question is a couple of analysts, a couple of notes have highlighted the fact that in the Bangalore market, we had one period last year where approvals were not coming through. Again, there is an issue going on currently where approvals as far as real estate projects have been stalled. What is the on-ground situation? Have any of your projects been stalled?
No, it is generally not just our project. All projects were stalled for about 2 to 3 months due to various changes in the civic authorities, I would say structural change. As I said earlier, Bangalore Bharat Development Authority, Bangalore Mahanagara Palike, Bharat Mahanagara Palike was there. It has become the Bangalore Greater Bangalore Authority by dividing it into 5 different corporations.
Right.
So they are still settling down, and that definitely created delays. Unfortunate, but that is the fact.
Okay. This is about the residential market, Mr. Jaishankar. I wanted to understand what is the update as far as the leasing or the commercial part of the business is concerned. Will you look at REIT in some way? What is the kind of growth you're envisaging in that portfolio?
See, we have about 10 million square feet of annuity income yielding projects, and already yielding annuity income. And on pipeline, we have another 9 to 10 million square feet, which should get completed in the next 3 to 4 years, or if not 4, maximum by 2030, which will all become by 2030. We expect to reach about 20 million square feet. At that time, probably it might be ripe for a REIT. Not earlier than 2030. We don't expect it to be ready.
Okay, so thank you so much for joining us, giving us clarity on the on-ground situation as far as the Bangalore market is concerned, also giving up some visibility, although slightly some time away as far as the REIT for the commercial assets is concerned. Thank you once again. Well, before we slip into the short break, if you could just pull up the intraday chart of KPIT Technologies. That particular stock in the last half hour or so has seen a significant sell-off and now trading near the day's lowest point. KPIT Tech, as you can see on the bottom of on your screen, down almost 6.5%. Well, we'll now slip into a short break. We'll get you more on the markets and stock-specific action on the other side. Welcome back to Midcap Radar. Well, we've had 4 listings today, but one particular listing that's been quite weak has been Jaro Institute. Upasna, who's been tracking this particular company, joins in with more details on the company as well as its comparison versus some of its peers.
Well, certainly. Overall, if we see, it's a flat listing. And the stock has fallen nearly over 17%, marking an intraday low of nearly about 732 per share. Now, if we look at the overall IPO size, it's about 450 crore, marking fresh issue of 170 and OFS of 280 crores. Now, if we look at the promoter stake sale, it falls nearly to 57.3% from 78.2%. Now, Sanjay Namdev Salunke is the promoter selling shareholder in this IPO. Now, let us look at the objectives mentioned by the company for this issue. Company says that the proceeds out of 170 fresh issue, out of it 81 crore will be used for marketing and brand building and 45 will be used for the repayment of the outstanding borrowings. In terms of overall industry outlook, if we see, India's online education and higher lifelong learning market is projected to see a strong growth at a CAGR of over 40% from FY24 to FY28. Now let us understand what does the company exactly do. It was founded in 2009. Jaro Institute is an edtech company specializing in higher education and even executing upscaling programs. It partners with leading universities such as IITs and IIMs to deliver its various offerings. Now let us look at the key financials of the company. Now if we look at the revenue growth for FY25, it stands at 27% versus the growth of as high as 63% in FY24. Now there is such a huge difference in the growth of these two financial years because company has discontinued some of its operations in FY25, which is why the financials stated in FY25 are on standalone basis, while for the other years comparable are on a consolidated basis. Now, if you look at the EBITDA margin, it stands at 33.1% versus 32%, and company's EPS stands at 25.5 versus 18.9%. Now, if we look at only the FY25, since the other years are not comparable much, let us look at the key indicators for this company in FY25. The company's ROE stands at 36%, debt to equity stands at 0.3 times, price to book stands at 10.5 times, price to earnings stands at 34.9 at the listing price, which is now cheaper by almost about 20%, and company's EBITDA margin stands at 33%. Now, if we look at the listed peer space, peer group companies, there are not much. Jaro has a CAGR of 66% versus the other companies, which the CAGR is from 46 to 155%.
Thank you so much, Upasana, for joining us and taking us through what exactly Jaro does. However, it's been a very muted listing, especially for that particular name. Well, as far as the slump in the market is concerned, especially the mid-cap IT pack continues to witness significant selling pressure. We did highlight KPIT Tech. A few of the other names like Emphasis and other IT stocks are under pressure. With that, it's all the time we have on this edition of Midcap Radar Mutual Fund Corner when we return.